Welcome back to another roundtable. My name is Adam. I have Rusmin.
Hello.
And Victor.
Hi everyone.
And recently has been AGM season. We'll be attending a lot of AGMs, three of us. You even flew to Hong Kong recently for an AGM.
Yes.
But we want to bring up Keppel DC REIT because some of you actually asked in the comments about Keppel DC REIT, what's happening with them. And Rusmin over here attended the annual general meeting very recently.
That's the little sticker over here.
Yeah, so that's the annual report. So we want to give you an update about Keppel DC REIT because post-pandemic, data center REITs did very well.
So popular.
Very went all the way.
Yeah.
Almost, not to the moon, but went up.
Before it reached the moon, it just fall.
And then it came down. And then in 2023, it kind of like rebounded a little bit.
Yeah.
But then recently it's come back down again. So like people who are looking at it or who are invested in it could be wondering what the hell is happening, right?
Yeah.
So before we jump into all of that, why don't you just give a very quick overview of Keppel DC REIT for those who don't know?
Okay, so Keppel DC REIT is a landlord for data centers, right? So they own about 22 data centers around the world. Okay, so I think they have Keppel DC, 5 of them or 6 of them actually in Singapore. And about the rest of it is actually in Europe, right? So you have 2 in Ireland, 3 in the Netherlands, and of course 3 more in United Kingdom, 1 in Italy, and the other 2 is in Germany. Okay, and then of course the rest are scattered in 1 in Malaysia, okay, not doing very well, and then 3 more in the Guangdong, okay, and 2 more in Australia. And recently they just divested 1 in Australia, so Australia only left with 1 data centers. Okay, so they have about 20 over assets, right?
Okay.
Data centers around the world, right? And if you look at their data centers, generally data centers is to house those expensive chips, right? Storage, servers, networking equipments, and when you watch Netflix, all this data that they stream through the cloud, is actually stored on the data center, and that's why the demand for data center is actually very, very popular, right? And if you look at the way they list out to the tenant, 65% is actually based on co-location type of contract, okay, meaning to say that the tenants can just move into their data centers and then they can start to bring in their servers and rack, and then they can start to run the whole thing, right? It's almost like a service office or service apartment, right? Okay. You have all the sofa, everything built in, right? And then they have 23% based on fully fitted, okay, and then 11% based on shell and core. So this is their leasing structure with most of the tenants. So above it is actually short-term lease, like 2 years, right? So and these are basically, in terms of occupancy for them, is actually very healthy at 98% to date. So it's very, very well occupied, right? I mean, the one in Malaysia is not doing very well, okay, because the occupancy only stays at about 40%. The rest is actually above 90%, and most of them are actually 100% leased out.
I think the lease is short term, 2 years, but then to most people, you understand that usually the tenant will stay down there for very long, right? So that's why a lot of people like data center REITs, because you know that once the data is kept there, they will be kept for long term.
There's a high switching cost.
Yes.
You will move around.
Correct. And most of these data centers are leased out to IT company, even normal companies who have their IT backbones. They need a space to run their servers, right? So they may lease out the space from the companies like Keppel DC. Okay. And if you look at the top 10 tenants, I think a bulk of it is the hyperscaler. Okay, so I think we get to see hyperscaler actually account more than 40%, right? They don't disclose who are the tenants, which is the main issue investing in data center REITs, because of the P&C, they cannot disclose who are the tenants. Unlike if you invest in retail REITs, you get to know who are the tenants. You can just go to the mall.
And you can tell the quality of the tenants just by knowing the brands and stuff.
Yes.
But it's different for...
It's different for data center because you can't enter the data center, right? You need to have a pass to go in because it's high security, right?
And also I think another reason why they don't disclose is because for security reasons, because if people knows the Amazon data is over here or Facebook data here, there's maybe a sabotage and all this. So that's why everything must be private,
Okay, so this Keppel DC REIT is one of the few pure play data center REITs, right? Because I think there are other REITs in Singapore that have data centers in their portfolio, but this is the only pure play one, if I'm correct.
Digital Core is also another pure play. Yeah, most of their data centers are in the US.
Okay.
Of course, you have Maple Industrial Assets, and then the other one is Ascendus.
Okay.
Yeah, REITs itself. Yeah.
Okay, so let's go back to what's happening with Keppel DC. So the share price, briefly, we kind of rebounded a little bit in 2023, and then it's come back down once again. So those who are watching could be wondering, hey, what's up with Keppel DC REIT? Is there an opportunity to have a look at this? Because, post-pandemic, digitalization, everything was a huge thing. So what's up with Keppel DC REIT, and why is it kind of like stuck in, you know, the doldrums at this point?
So I remember back in 2020, right, I look at Keppel DC share prices, I was like, oh, this is one of the best REITs in terms of performance, right? It reached almost as high as $3, and then after that it came back crashing down in 2022 when the Fed started to raise the rate. REITs across the board came down, and then of course the other main concern at the time when there was a slowdown in the late 2022, that was due to because of the higher electricity cost. At the time, I remember one point that, you know, I look at my electricity bill, was like it gone up by twice or triple. Right? And a lot of people were concerned that, you know, Keppel DC data center actually consume a lot of electricity, right? So and that may actually hurt Keppel DC, and that may boost their operating costs. That will affect DPU. And then in the end, people found out that, hey, actually a lot of these costs are actually a pass-through cost, and the tenants are the one that are bearing the cost of the higher electricity. And they actually say that more than 90% of their cost in the electricity is actually passed through. And those master lease are the tenant who actually have to bear their own electricity bill itself. So and that actually passed through, and the price have cramped down and then started to recover again. And subsequently, of course, we have the issue with some of the tenants in terms of rent dispute here and there, like DXC. And then they have Cetera, which got into liquidity issue, and that actually hurts digital core REITs quite a fair bit, because the share price for digital core REITs actually collapsed because of that, right? And then they structured the deal, and then they sold those data center. Now Cetera is no longer an issue in their portfolio. But it also didn't really affect Keppel DC, because Cetera exposure for them it's less than, I think, 2% according to the management. So they are quite safe in that sense. And that's where the share price recovered in the first half of 2023. And then second half, it came back down again because there was news that announced or came out by the Keppel DC management saying that the Blue Sea, one of the master tenant in their Guangdong data centers, have defaulted on the rent. So and that caused a panic, and share price just tumbled.
I think the dividend also cut by 16% in the second half.
When that happened?
When
that happened, more than 10%.
I think it's interesting is because the tenant, I think, leased to another listed company in Hong Kong. It's called New Telemedia. So it's very interesting is that the tenant, when I look at the financial, they are having operating losses since 2018. And if you look at their cash and debt position, they have been growing their debt, and their cash position have become very small amount. So it's very questionable why they
so this is the end tenant, right? Not the master tenant.
The end tenant, they actually lease out to them. I mean, you can see there's really financial issues. I think Rusmi have some insight from the AGM on this.
So I went to the AGM because there were a lot of questions about this Blue Sea Guangdong data centers default at the AGM. And I think during the AGM, I think at least 7-8 questions asked were actually related to Guangdong data center. And there were a lot of questions about how Keppel DC onboard some of these tenants, because when we look at Neo Telemedia, like what Victor did, right? The financials are terrible. Why did they proceed and go ahead with buying Guangdong data centers? Right? And knowing that the fact that the tenants are not in the good financial position, right? And the management basically says that, these data centers are actually leased out to a master lease out to Blue Sea, and whoever tenants that they lease out to subsequently is none of their business, basically. Right? So they don't really have the look through in terms of who are the tenants inside this Guangdong data centers, which is funny to me because they can access the building, right?
So in a sense, they were saying that, hey, I've leased this out to a master tenant. My job is done. As long as they pay me, that's okay.
So but then they defaulted.
So the master tenant now defaulted because their end tenants are not paying them, and then this master tenant is not paying Keppel DC. So this whole chain has become like a chain reaction all the way back to Keppel DC.
So that becomes a problem, right? And now the management have to basically says that they are working, instead of suing them, because now they are in a good financial shape. Even if you sue them, you may not get the money back. The way I see it, they are working with them to turn around the situation, right? So they are working with Blue Sea and look at the whole portfolio of tenants, and then basically find a new replacement tenant for those tenants who are not doing well. And of course, these data centers, Guangdong data centers, a lot of tenants were actually affected by the crackdown in China, the tech crackdown in China, and because of that, I think they didn't do so well. So some of them defaulted, and now they're working with Blue Sea to find those replacement tenants to turn around the situation. So far, I think according to the management, they are seeing some green shoot.
Okay.
But I don't have high hope for that actually, because
it's a bit vague, right? If you say we see some green shoots.
Yeah. So there's no clarity on that. And there's oversupply of data centers in Guangdong area, right? Look at the utilization rate for Guangdong. I think it was like hovering between at about 70% only, right? So you have 20% vacancy, and that could be a issue for finding a new tenant, because there are a lot of choices there, right? So when they enter into this agreement to buy the data center, Guangdong data centers, I think they basically, it was a creative deal, but then the problem came up with the counterparty risk, right? Because one of the main risk is that when you have a master lease like that, your counterparty risk is very high. Okay, so you want to make sure that the tenants are very solid. Okay, so I can tell that from the meeting, a lot of shareholders were very upset on how they onboard this master tenant.
Yeah, I was going to ask you about that. What were the reactions and emotions going on at the meeting?
I think they were just drilling them on this, and asking about the corporate governance, and they said, there are lessons to learn on this. So I believe this is also the first time they're encountering this. I don't know, but basically, the way I look at it as an investor, right, Guangdong, it's you have to write it off, right? If you are assuming that, if you are planning to really look at Keppel DC as an investment, you have to write off this part. It's not a good deal the way I look at it, okay? Because they enter into this market knowing the fact that there's a lot of supply in that market itself. Not like their main core portfolio where Singapore is solid. The vacancy rate for data center in Singapore is tight because of the moratorium that Singapore government placed in 2019. So currently there's no supply until 2025. Right, so very difficult to lease a data center space in Singapore because there's a limited supply, right? And they have assets in Dublin, right, Ireland, right? So those markets are very healthy, right? Germany, they are very, very healthy. Even Australia is decent, okay, I would say, but about of their portfolios are very decent. But the one in Malaysia and Guangdong have too much supply. Okay. So it's very difficult to find. I think it's very difficult to find tenants over there.
So what is the proportion of their portfolio in China?
At this stage, I think based on AUM, the exposure is about 7.4%.
Okay.
Right. So, but based on NPA contribution, I would easily take at least 10% haircut. Okay. Right. If I'm assuming that the Guangdong exposure, this tenant exposure may default. Okay. Yeah. So Victor will take a more extreme approach, 20%, right?
Yeah. I think because if you look at the dividend, right, now the dividend in 2022 is about 10.21 cents, right? 2023 is about 9.38 cents. There's a drop of about 8.1% from the previous year dividends, right? And I think it does not reflect the full drop because the Guangdong one only accounts for the second half, the drop about 16.1%, right? So I think a lot of analysts will expect a 16% cut in terms of the dividends, which happens in the second half, 16.1%, right? So if you were to take the full year dividend, right, I think you should cut to be more conservative, right? You should cut 20% because you don't know what will happen, right? Yeah. So you just cut 20%. The dividend should be around 8.168 cents. Okay. 8.168 cents. Yeah, correct. Okay. Yeah. So based on the current share price, about 4.8% yield.
All right. So I mean, so this is what you assume, like Guangdong is kind of
just gone,
just cut off.
Yeah, correct. But this also reinforced that a lot of people thinks that data center A-lease tenant, right? The tenant won't default and all this. It's not true, right? You don't always get the best tenant, right? So this already shows that, because every time people think that data center is always the Fortune 500 companies, the big companies, the Amazon, the Facebook, they will use all these data centers, right? And their tenant very strong, they'll stay out there. It's not true.
Yeah. So as an investor, you don't have to look through on who are the tenants. That's the problem. So you rely a lot on the management. So when the management screw up, like in the case of Keppel DC REITs, the ex-CEO have left. Now the new CEO are taking all the arrows. So I feel pity for him when he was answering the question because he only took over 2023, right? And all this problem has started, I think, way before that. Okay. So poor fella. But he did a fantastic job answering the question.
That's what he's paid for, Make sure you can do, basically turn it around.
Yeah. So investors rely on them to onboard quality tenants, right? Because you don't tell us the tenant, there's no way that we can check the financial of the tenants. Yeah. So you have to do a good job on that. And Guangdong Data Center seems to be poorly done. right? In terms of the way they check the quality of tenant. It's just like quick deal making process. Oh, DPU accretive, let's do it.
Okay.
But then the problem show up later.
Yeah, but I think this is really interesting
people are
because you can rely on the management to say, hey, Blue Sea, the master tenant, is a quality tenant, etc. It's been around for I don't know how many years, etc. But then you don't have the info on the links layer.
Yes.
And maybe even Blue Sea doesn't know as well. I don't know what they're doing.
Yeah.
But that really just adds a layer of complexity to your analysis. And if you're if you're a beginner or you're just not so sure about this, you might just miss it entirely.
Yeah, I think despite all the negativity over Keppel DC, the share price drop and everything, right?
Yeah.
There's still some positive aspect that we can look
Okay.
at. Firstly, I think the management already learned this thing, right?
Yeah.
Moving forward, definitely they don't want to repeat the same mistake.
Yep.
Which I think very high probability they will want to repeat.
Yeah.
And second, that if you account the drop excluding the distribution payout from the Guangzhou, which I say you're very conservative, and based on the dividend that I told you just now, and you still can get a very good yield from that. Then moving forward, eventually all this will end. They can sell away the property, they can fill up with tenant. Eventually, something will happen. There's definitely the management will sit still. They will do something, right? And if you can buy at a good price, at the end it's really paying at a good price, getting a good yield, you can make money out of this opportunity that arises. Don't always see negative as
bad,
right? It's negative sometimes give you opportunity. It's just that it's our job as an investor to see how conservative can we project or assume the numbers, and can we get a very high risk reward ratio.
Makes total sense.
Correct. So actually, if I look at their past track record on some of the data centers that they have bought over time, a lot of them are actually yield accretive, right? Apart from this Kwangtong data center that actually blew up recently. Hopefully not those past deals also blew up later on. But it's part of it. I think if you look at the big picture, I think Keppel DC still have I think 80% of their data centers market that they are in, like Singapore, Germany, Ireland, it's in tight supply. So data centers are still crown jewel assets for them, and they have delivered steady growth of DPU over time, right? Until recently that Kwangtong data center problem start to blow up. So again, if you are coming in again as looking this as an investment, you have to write it off, right? Do a haircut for their 2022 DPU, right? So that I think Victor gives you that 8 cents plus of DPU that you can use it to assume your yield. And of course, the other two deals that they also made, the recent one actually is their sales of data center in Sydney, Intel Center, I think, right? So they actually sold it at a very good price. So I have to give it to them because they managed to exit at 3.6% cap rate. Wow! And they bought this for 70 million. They sold it for 174 million. Wow! So it was a very good deal. And on top of that, they took 90 million out of this 174 million that they sold. They reinvest back into these data centers, but as a notes holder, right? And they get a yield of about close to 7%. Oh, that's good. Almost the amount of income that they will get if they were to keep these assets in their portfolio. So it's still slightly yield accretive from this deal. It will last for about 8.5 years, and they take the rest of the money, all right, about close to 80 million to pay down the debt, and that actually reduced the gearing level. So it's a very good transaction. And before that, they also did the net core investment, where they actually invested in some of the M1 infrastructure. And they got a very good deal also for 15 years at 9% per annum. So I mean, even though I think about close to 5% of their AUM is actually invested in non-data center REITs, I think this proportion is still very small, and they have done a very good deal on that. So this is something that we still have to give it to the management.
I think at the end, we still need to look at the management as an overall, right? If they consistently make bad decision, then those are the management that we do not want to be within, right? There's so far Keppel DC overall the decision is quite good. It's just that this just one.
This is probably the first time. Would you say that?
Correct.
And
this probably is the mistake that give you the opportunity, right? To to look at Keppel DC.
Yeah.
In terms of the valuation.
All right. So since you mentioned valuation, let's go dive into the value. So you mentioned you did a haircut. If you
20%
just
from the 2022 dividend.
basically just assuming that the quantum portfolio is just gone.
Yes,
in
correct.
a sense, right?
And I
So-
just give an extra buffer.
Okay.
Right.
So that will give you a dividend per unit of.
8.168 cents.
Okay. So using that, what is the yield at this point?
And the current about 170 is about 4.8%.
4.8% yield.
Yeah.
So
Okay.
it really depends. Are you okay for 4.8%?
Mm.
Right.
Yeah.
This assuming that write off, but if they can really get back
Yeah.
that portion and collect back the rental, get a new tenant, then that yield will be higher.
Okay.
That's a bear case. Right?
It's
Very
a depress you.
very
Depress you.
depressed you and very conservative. Right? If
Okay.
you're really on conservative,
Mm.
based on my estimate, is about 10% lower than the haircut that we saw. Because they have done pretty good deal in rent reversion also coming in, and the bulk of their assets actually core location, which allows them to increase the rent at a higher pace,
Okay.
despite knowing that we have pressure on interest rate. But their core location structure is actually very beneficial currently. So if you, let's say I base it on their 9-cent dividend, let's say they can consume to maintain that, right?
Yeah.
Based on current share price of 170, the yield comes out to be about 5.3, 5.4%, which is near their the yield before the pandemic,
Okay.
which is quite decent the
Okay.
way I see it. So I think conservatively, I would say maybe at current price of 170 at the time of this recording, you should get 5% yield for your data center exposure. Yeah, because before that, I still remember during COVID, after the COVID 2020, the yield for the Keppel DC actually fell below 3%.
Yeah, I remember it was like 2.something%.
2.8,
yeah.
2.7, crazy.
Yeah,
That kind of valuation you shouldn't get in.
Yeah.
Those who have bought then, I think now will be crying because the
Yeah.
share price have crashed by almost half.
I remember some people asking whether they could have a look at Keppel DC at that point in time, even at 3% yield, and we were like saying it's really expensive.
Expensive.
Yeah, because there are other investments that could
Yeah.
give you a better yield. But now it's a different picture. Like
Yep.
you said, it's an opportunity.
Yeah.
Yeah, and 5% yield for if you're looking for data center exposure.
4.8%.
Yeah.
to
I won't say the
5%.
risk reward ratio is very high,
Yeah.
but I say it's decent.
Yeah.
Yeah.
Okay.
But it's not in the where the risk is higher than the reward.
Mhm.
It's
Yeah.
definitely the reward is higher than the risk, but it's just that it's a decent
Okay.
risk reward ratio.
Yeah. Makes
Yeah.
sense.
We are biased, we have a vested interest.
Okay.
But even though we have share, I'm still hoping that it dropped to 150.
They pick up a bit more, huh?
Yeah, pick up a little bit more. Yeah, 150. Yes.
All right. So
yeah.
no recommendation to buy or do anything here. This is just our research based on attending the annual meeting.
Yeah.
Hearing all the unit holders there asking questions,
Yeah.
grilling the management.
And based on our conservative calculation.
Yeah. So we always want to make sure that we cover all our bases when it comes to our research. And once you know that base scenario or the bear scenario and you're comfortable with that,
Yep.
then maybe you can start making a decision for yourself. So it's up to you. Please do your own research and due diligence and see whether this makes sense. But this is how we would look at Keppel DC at this point in
Yeah.
time. Yeah.
Yep.
All right. Is there anything else you want to share from the AGM? Is there anything interesting that you saw?
You get to see a lot of upset investors who bought maybe relatively a higher price, so they
Okay.
were not very happy.
I mean, whenever it
Yeah.
comes down, you see a lot of people, a lot of questions.
Yeah.
And when it's the other way around, no questions.
When the share price always do well, you go to the AGM, no question.
No questions. Yeah.
It's very weird. Yeah.
I mean, it's totally normal, right? In that sense. So a lot of disgruntled unit holders, but would you say the management is keeping a tight ship in a sense, still trying to
I think it's because it's still a new management, right?
Okay.
It's just last year
yeah.
only. Yeah.
I mean, overall they've been
Yeah.
around.
I think once you get an asset quality right, which
Yeah.
I think about the portfolio is in Singapore, Germany, Ireland, Italy, Netherlands, UK. Those assets it can't go wrong.
Okay.
Too far off, right?
Okay.
Because that actually constitute 80-90% of the portfolio, 80% of the portfolio. Those are the core. I think market in data center in those markets are very healthy, will continue to do well for the next few years. But the one that is in China, Malaysia is a big question mark. Okay, and this actually account less than 10% of the portfolio. Right. So above it, I think the tenant will still be there. Even though if there's a tenant coming up default in Singapore, for example,
Yeah.
there's a tight space of data center here, so it should not be too difficult for them to
To
lease out,
replace it. Yeah.
to replace a new
Yeah.
tenant. And having tenants default is part and parcel of leasing out property, right?
Yeah.
And this is something that they have to handle it and manage it, make sure that it's not too big of the exposure, or there's no way that they can actually turn around. I think it's very important for them to make the right decision to buy which assets.
Mm.
Okay, I don't know why they go into China. It's a terrible deal for me.
Mm-hmm.
Yeah, because of the oversupply situation over there in Guangdong.
Mm.
Even though China has a bright outlook, in terms of digitization, but I think it's just they have to be very careful when selecting which data center they want to buy.
Okay.
Not simply to grow the AUM.
Yeah. Okay. Yeah, that's a good point. All right. Is there anything else you'd like to share about?
That's all.
That's all,
Keppel DC. Okay. So with that, if you have any questions about Keppel DC REIT, we're happy to answer them in the comment section. Of course, you can always email investor relations as well and ask them your questions. But I hope you enjoyed that roundtable. If you like it, please hit the like button and of course subscribe to the roundtable. Many more roundtables come. My name is Adam, Rusmin, Victor.
Thank you.
Thank you so much, and we'll see you again.